had quite a shift on the risk calculation on the 24-hour difference. We still are risk on at the big picture, but the 24-hour difference is sort of knocking away, sort of chipping away at the big picture. If we continue to do this, then we're going to be risk off at the big picture. So still got a bit of time left, but you know, this is a little bit of an omen. We really don't want the VIX above the 26.5, which is your yearly pivot. It's the halfway point between the low and the high of the year, and so we still are below that, so that's possibly quite reassuring for the bulls. So I want to talk about, well, we got this new thing, but that's hopefully should be quite self-explanatory. What you want to see in the US Treasury yield curve, you want to see a healthy yield curve where it's not flattening. You want to see upward momentum. So we want the 30-year to be higher than the 10-year, the 10-year to be higher than the 5-year, the 5-year to be higher than the 2-year. Now what happened last week was the 2-year was higher than the 10-year. So hopefully that's clear. If you need me to explain this, I don't mind at all. I did put a link in the Telegram explaining what the yield curve is. It's about to do with short-term and long-term interest rate projections. So it basically gives you like a heads-up view about the health of the market. So there's going to be a rush to safety if this goes up and then this comes down. So the people, like the big fish, are going to flock to bonds and then are going to get out of the stock market. While this is low, they're going to invest in the stock market, and we're talking about the big fish. Right, so that's why this is important. You want to see like a healthy curve, which that's fairly healthy. Could be a little bit higher at the long end, and that could be a little bit lower. You know, obviously that should make sense, right? Hopefully that's clear. So we want to talk about yesterday's Aussie projections, and I want to talk about today's projections, where we've got a little bit of CAD weakness and a bit of Swiss strength. So we'll have a look at some projections for that, and I wanted to talk about how to calculate the pivot on ES, which is the S&P, the E-mini. So what you want to do is get a calculator and type in the 52-week range low, and then add the high divided by 2, 4418. That's how you get the midpoint of the range, the 52-week range. So work below 4418, we're under a bit of pressure. There it is there. Okay, so technically it's pretty, well, it's quite soggy, it's quite weak. We want it above that level, so keep an eye on that level, that's very important. And just to back that up, we've got the sentiment on the S&P over here, and they went long against the 21 moving average there. So 4515, they went long against the average line, and you see how the average line continued, and then they bought the dips, and they really went long there, and they're continuing to go long. And the trouble is with the round number, it's going to encourage them to come in at the casino, and you know how the retail guys are with their risk management. They won't have very good risk management, so it could potentially come down to destroy these guys. And we're below the yearly pivot, like I say, so technically it's a bit soggy, it's a bit weak, and you can see how we're below the parks. We've got a super trend that's in descent as well, and it's looking quite ominous. And we've got the inflation data out later, which is supposed to be like horrendous as well, so it could be a very, very difficult day. Interestingly, we are above currently where we are supposed to be according to this forward curve, but I need to study this a little bit more. See, in 2024 we're supposed to be 4552, which is up there, so maybe we'd actually exceeded it a little bit. We'd actually got ahead of the curve, so perhaps this would be like normal behaviour, expected behaviour. But I need to study this a little bit more. The performance is fairly weak as well, Strong sell on the technicals, so yeah, got to be careful. So let's look at the setups yesterday. Aussie, yeah, and I was saying how, you know, you'd want to wait for that to break, which it clearly didn't, but you can see how multiple respects of that support, and we've got that resistance overhead, so really nothing really to comment on there, the same as yesterday. And the level of interest there was 92.40, but you can see how that's going to hold. Assuming that's going to hold. Aussie CAD was one. Right, so we did fall. We fell 54 pips, and looks like we're having a little bit of support here. I was saying how we should probably wait for that to break. It never did, but we did fall a little bit. Don't forget we've got CAD weakness today as well, so this might come up. So you have to remember that the sentiment is dynamically shifting all the time. Aussie USD, there we go, 74.77. That would have netted 75 pips had you caught the bottom, which is obviously difficult to say. So, you know, to try and catch the bottom. So that was a good one, and it did fall. So there we go. So that was quite cool. So let's look at some. What was it? CAD's weakness, and so there we go. I suppose this could be probably a really good version. No, the one to trade would be this, because according to this, it's the strongest to see the darkest colour. So this could be a good one. Here would be the sell 73.58, where you target 73. Yeah, 73 on the dot. So let's move that down here, and we can look at this tomorrow to see if this panned out. But sentimentally, this should be a good short, and so you want that to break, which isn't that far away. We might come up a little bit, and then we might sell off. But at least you've got your level of support here, and you'll note that we've got some support here as well. So that is quite interesting. There might be better, 73.56. And we can fall quite a way, you know, so 55 pips, your stop loss would be 73.64. Keep it nice and tight. That should be a good break actually. Zoom out. Yeah, that's obviously a key level, and there's a level there as well. So just to be extra sure, 73.54 with a stop here. That could be a really good R. That's wrong. This one, somewhere there, and then you'd try and target a short there, potentially 73.56. So you're looking like a 15-16 pip stop to get a TP there. So we can have a look at this tomorrow to see how this panned out. It might not go to plan, but sentimentally this is a good one. Technically it could be a good short. You know, you had a resistance, then support. This is like a turncoat support resistance level, so that could be quite good. But we'll have to wait and see. Hopefully it was a useful video, and any questions about this I'll be happy to answer. So ideally we want the 30-year a little bit higher, and we need that 10-year to be a little bit higher as well. I might tidy this up just so it looks a bit neater on that. So we'll see how we go. And any questions I won't mind at all. If you want to join, it's patreon.com, QuasiDB, and that's me. And then you just go to that address and then you just sign up there, and hopefully you sign up. And any questions, don't be afraid to ask. I'm always here and I won't mind at all. Let's see what happened to the S&P. It's looking pretty heavy right now. Remember your yearly pivot level as well, 4418, and I'll speak to you soon.